Hey guys, you've joined us live at Moneycontrol. I'm Manisha Gupta, and gold continues to outperform various other asset classes. We've seen the prices gain up by almost 12% in this year. And when you look at the last 12 months, we are up by nearly 20%. So we are at around $2,000 per ounce right now, which has been the highest level since the month of May. And the prices have seen 3 weeks of gains already. And this is the fourth week that you are seeing gains continuing to the prices. It has been in this month of October itself that you have seen gold hit an all-time highs in various currencies like Australia, Japan, China and Taiwan as well. And it was in this year that the Indian gold prices also saw an all-time highs. Well, the chaos in Middle East and the US government debt crossing $33 trillion have been a couple of reasons that have led to gold prices be in favor here. Markets also are watching out for strong trading volumes. Hedge fund buying has been on the higher side as well, and all of those factors clearly have been on the supportive side. The China gold consumption for this year is expected 7.2% on the higher side, and the markets do anticipate that this quarter of the year in the Indian markets could be looking at sales gaining up as well. Well, those numbers are coming in anywhere between 5 to 15% there. But this is what the gold prices clearly have done in this year. We started this year with 1823. We saw a high at 2050 in the month of May. And the last two numbers show you on how the month of October clearly has been. We saw a low of 1820 and then a high of $2,005 an ounce. So it clearly has been very, very volatile in that sense. Having said that, this week is going to be important because you have the US Fed decision coming in on Wednesday. You also have the Bank of Japan and England meetings. And then you also have the US non-farm payroll data coming in on Friday. So it's a heavy week in that sense. And the gold prices will be taking cues from each of those events and numbers. Joining us then is Chirag Sheth from MetalFocus with making sense on what we can expect from here. Chirag, hi, good to have you. How are you looking at, first of all, the price moves itself? Because even as, pardon me, the dollar index is trading higher, the bond yields are at near 16-year highs, gold has managed to hold itself.
Yeah, it's been an interesting last, I would say, couple of weeks. You had this scenario where gold prices were actually falling because of, the focus of a Fed, where, there was expectation that Fed could increase their, another hike by end of this year. And then suddenly you've got this geopolitical tension which came in. And then you saw this massive rally coming into, gold prices. So it's been an interesting, I would say, month or so. And at this moment, the focus continues to remain over geopolitics rather than macroeconomics. So till the time the focus remains on geopolitics, you will see elevated prices in gold. And once the geopolitical premium starts easing and then market focuses back on macroeconomics, then you might see a bit of correction coming in.
So what's your sense on where could the geopolitics take it? Because many banks and brokerages are anticipating prices northwards of 2200. A couple of reports also suggesting 2500 in the next year. How would you look at that optimism?
Well, it's always difficult to put a geopolitical premium onto the prices. However, I think we've got a bit of history in place. So obviously, the fact that we've seen what happened during the Russia-Ukraine crisis as well, or some of the other geopolitical tensions that we've seen in last 5 to 10 years, I think if the geopolitical scenario doesn't spread towards other regions, then we normally do not tend to see a further rally into gold prices. So let's say if market has already moved from, let's say, 1980 or $1,800 to maybe $2,000, you've already seen a $200 rally, and then another $40-50 jump could further come in. However, in this case, there are a lot of I would say unknowns. We do not know whether Iran would get involved directly or not. What is going to be the impact on oil supply through the Strait of Hormuz? So unless and until there is no clarity on these issues, you might see gold actually going towards $2,050, $2,080. If things tend to escalate, then yes, maybe 2200, 2300 all remains just a mere number, right? However, if tension remains where they are, and no new countries then come into play, then we'll see similar reaction to what we saw probably in when the Russia-Ukraine war came in. However, we do not anticipate now gold again going below maybe 1700 or those levels.
Okay, so geopolitics is one part of it really, but with the kind of slowdown that we've seen in various economies, and let's not forget the $33 trillion US debt, I mean, that really seems to be a headline right now.
Yes, and this is something that all of us have seen over the last 15, 20 years, where every few year, the debt ceiling uh, reaches a certain point, and then the Fed goes to the Congress to raise the ceiling. So I think this continues to remain a big issue. However, I think one difference, Manisha, is that for unlike a lot of other countries, US debt is in their own currency, and all of us know that these days deficit financing is much more easier for US, as it just needs to print its own currency. Obviously, it has got an impact on inflation. It has got an impact on economic growth. However, unlike Europe, where it's a bunch of countries which have come together to form a currency, that's not the case for US. A US debt is in own currency, and that makes it much more easier or less difficult for them to manage.
The other important point, Chirag, really is about the buyers. And apart from central banks, which have been buyers for last couple of years, I mean, last year and first half of this year as well, how would you look at that pattern when it comes to Indian physical buying or the global ETF buying for that matter?
So I think central bank continues to remain fairly strong. Central banks are now one of the major players in the gold market. Last year, central banks did about 1,100 tons of gold buying. While this year, we believe that the central bank buying may remain robust. Obviously, we do not expect central bank to do maybe 1,100 tons like last year. I think central bank buying could range anywhere between 650 to 850 tons by end of this year. With regards to physical market, I think we did see some improvement in the Indian market once price correction came in. Obviously, now we are into the peak demand season, and some of our discussions that we had with jewelers have revealed that the market has remained strong over the last couple of weeks. I think the fact that there is festival, there are weddings, we believe that this quarter could be very good. However, we will have to pare down the expectations given the recent rally that has come in.
All right. So, when you look at slightly longer term, and markets do believe that there could be safe haven at a lot of levels, whether it's about fiscal or geopolitics for that matter, and the fact that the gold has been able to stand its ground. What is the range that you will now put in for the next year? I mean, gold has been quite volatile. 1,800 and 2,050 is what we've seen in this year. Any sense on where we could be looking at this range for next year?
Yeah, so I think, what's becoming very interesting is that it's becoming more and more difficult to predict where exactly, as you pointed out, the range is becoming far more difficult to predict, given the fact that there are so many geopolitical concerns, macroeconomic concerns which are coming up. However, we believe that, probably gold could see on an average, 3 to 5% year on year jump in terms of prices. However, we do not believe like a runaway rally unless and until there is a severe deterioration of geopolitical concerns. We believe that gold could actually trade into this range for next year as well.
All right, but at this point in time, Chirag, clearly outperforming various asset classes, almost 12% up, which has done better than the equity markets, believe you, and also in the last 12 months, nearly 18 to 20% of gains. That clearly keeps gold in favor there. Chirag, as always, thank you so much for joining us at Money Control.